Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so this is overnight market prep for Wednesday, May 14th, getting ready for Thursday, the 15th. And so, yeah, I'm just going to be going through the usual tickers here, kind of the OG ones. I'm not going to be going over natural gas and gold, just to kind of keep the list a little bit shorter. And then I did want to go over some tickers from really like the past couple of videos. Did add another one just because I wanted to go over some of the things that I have done today, really just on the theme of trading the plan. And yeah, whether that's with stop losses or limits, I think it's really important to be doing that. And so anyways, I'm going to dive right here into the charts, looking over at the UVIX, which is the 2X long VIX futures ETF as always. And it closed today green, up about 5%, closing at 28.91. And going up a little bit more in the after hours as well as pre-market, up about 1.69% in the overnight trading. And so I am wondering if the VIX might be actually starting to form a bottom like I have doodled out here, maybe to get a bounce up here to around, I don't know, maybe like $37 or so, right around where the cursor is. So I do find that pretty interesting. And, related to this, with the VIX, the UVIX going up, you can see over here, just like where the cursor is, that's the VIX right in front of Ed's face. Both of those were green on the day, but very interesting. The SPY, as well as, of course, the SPX, those were also green. So as the markets were going up, the volatility was also going up. And Gareth Soloway actually mentioned this in his game plan from earlier today, just noting that seems like, larger firms, bigger players might be starting to hedge. Probably not doing it with the UVIX. I would imagine the VIX or the VXX. I think those are some popular ones. But personally, I just like the UVIX. And so I did add to my position. I did have a buy down at like 27, but the low for the day was 27.78. And I, just thinking that, hey, maybe we're starting to bottom. I did buy more aggressively. So if you are curious, I now have 8 shares. My average price is $32.88. So getting back up to this line, I would be in the green, but 20% for me would be just below, right around $39.50. I might be adding more if it does go lower. I might not be. I've just got a limit buy at 27, and we'll see if that fills. And it looks like the low from, let's see, Tuesday over here was 26.23, bouncing a little bit there, but also bouncing a little bit with a smaller volume, less volume here. But really, this is just kind of consolidating, potentially forming a bottom like it did over here, following the gap down, hung out down here for a couple of days before starting to rally. But also may not happen, could continue lower, maybe coming down to around 25, this purple line here where I've got this alert. So, it's no big deal if it does go lower. Like I said, my position's not that big. I usually do start building positions pretty small since I am not a professional trader. I am learning as I go. I did start building a position up here, but it was very small, 1-2 shares, something like that. And then I did get more aggressive down here. So my average is pretty reasonable. I could be getting out in profit or at break even if we do get a bounce like I have doodled here. And that downtrend, that light blue downtrend there at the top, is the top of this parallel channel based on the pivot high from September 6th as well as from December 19th. And we can see those two highs there as acting as resistance until we started to break out, but that was a fake out on March 11th before we did see this massive rally, hitting a high of 105.18 on April 8th. We have now pulled back. It's actually pretty impressive how far it's pulled back, about 73% to the downside. So this is one that's good for swinging short term. And I must admit, I did have a position in the SVIX, which is the short VIX. not leveraged, whereas this one's 2x leveraged, but long, the SVIX is 1 times, so not leveraged, short short the VIX. And if I would have held that position, I would be in the green right now. But I feel like if one is to play the VIX, it's better to go long just in this market. We do tend to see kind of violent moves to the upside and then slower pullbacks. So yeah, I mean, I am expecting a bounce with this. So I am looking forward to that. But then anyways, let's flip over to the VIX. This is the market volatility index, or the fear index, not the panic index. The fear index did close at a price of $18.62, so still down below $20 a share, but it does look like, hey, that level, I've talked about it multiple times, at $17.91, that's 786. That is, based on the 786 from this retracement here, did act as support over here. That was, let's see, the end of March before we rallied up to around 60. So a very nice move there. It's about a 3x, from about 18 to around 60. And then now we have pulled back. So maybe that does act as support again. Maybe we do put in something that looks like, a head and shoulders pattern, maybe something like that. And, if something like that does happen, I will then ride the UVIX up. I will take profits quickly. I like to go for just 20%. And, even though I could, when thinking about the VIX, the volatility index, could be riding stuff like this for much more than 20%, like just from the bottom here to the top there, that's 100%. But at the same time, you never know when you're going to get the exact bottom. Maybe you don't. You never know if it's going to go all the way up there, because like the rallies over here, let's just see, from this low to this high, that's around a 50%. So if you maybe get your average in the middle, yeah, it's about a 20% move to the upside. So I think that's kind of a nice way to trade. But I personally don't trade the VIX because this is just options. Like I said, I like the UVIX, and I've been building a small position down here. But anyways, with, be kind of short or being, long the volatility, let's now look over at the SPY, which is the S&P 500 tracking ETF, which closed on the day up about 0.13%, around $587.59, but pulling back a little bit in the after hours and the overnight trading. And so we can see that these levels that I believe I doodled up here on Monday, we can see that we're kind of, bumping into some resistance up here. So the high from Tuesday was 589.08. We're now putting in kind of this little doji here, bigger wick to the downside. So it's not necessarily as bad as if it was like, a really big wick to the upside. That would be suggesting that there are sellers up there. But this does seem like, maybe it could be going a little bit higher underneath that uptrend, but I suspect it will likely be rolling over just because, everybody seems like, we have, actually, this is something I wanted to do. So I'm glad I'm rambling about this. I wanted to look at the monthly candles, or actually the yearly candles, because I have heard that we have, regained all of the losses from the year. And actually look at that. That's pretty cool. So we can see for this candle, this is the year for 2025. You can see the year down there. I don't typically look at these yearly candles, but so the start of the year, we opened with the SPY at a price of $587.62, closed right around there, 3 cents off. So that's pretty remarkable. And everybody's like, we're in a bear market, all of this stuff, but we have, reclaimed, all of what we have lost in the year. We did go a little bit higher at one point. We were up at 611.39. I do believe that was the all-time highs for the SPY, as well as also with the SPX, very similar pattern here. Basically the exact same. The all-time high for the SPX was $6,147.43. And, the open of the year over here was at a price of $5,903.26. And as you can see, we're about $10 lower than that. So, it's a little bit more red here than with the SPY. But generally, we did see a pretty nice bounce. So I think that's, looking pretty good. But with that being said, with the headlines being, all of those losses have been reclaimed. Tom Lee being praised for nailing beautifully the V-shaped recovery that we saw over here. Everybody was panicking down here, and he's just like, I think it's going to be a V-shaped recovery. We got that. But with that being the headlines, we all feel great. That is the time to be cautious. So I do think that this could be pulling back the SPY, the SPX, and that is why, I've gotten to be a little bit more aggressive with my UVIX position, but also still with room to add more. And one of the things I've been trying to get better at, a lot of the position sizes that I talk about on here, they're probably going to be laughably small. The reason for that is because I want to make sure that I have cash on the side, trying to get better at doing that. And I definitely have been doing that more so the past couple weeks. So I do feel, I'm proud of myself. But anyways, looking at this, I have talked about this coming back down to around 567, and very similar over here with the SPX coming down to around $5,700. So that would be from the SPX about a 3.5% drawdown, and that's going to be basically the exact same thing over here, I imagine. Yeah, about 3.5%, right around there. So I think it's good to brace for that. And also, we do see this kind of uptrending consolidation that does look like potentially a rising wedge that might be breaking to the downside. So good to be cautious about that. And speaking of being cautious, let's talk about Bitcoin. So over here, we can see that Bitcoin is currently trading around $103,000. We did get up into this yellow box that I've been talking about, but we did not hit this level here at $108,000. That is based on this red Fibonacci extension from over here. And the high that we hit was just shy of $106,000. But the thing that looks nice about this is that we are consolidating after this upside move. And what we have done in the past is when we move up, we tend to consolidate for about 2 weeks, move up, tend to consolidate for about 2 weeks, and then now we have moved up. And so with that being said, actually, in case I'm incorrect about that, let's just see, from this candle over here, that's actually going to be less than 2 weeks. It's about a week, 9 bars before really starting to get notably higher, or 6 or 7. But if we do look over, oops, not that. That's not what I wanted to move. If we do look over here, so following this big green candle, we can see that it took us about 14 days to really start to get this momentum, all of these green candles going up. So if we kind of replicate that, with this big green candle being similar to this one over here, if I just move that over to here, it seems like we could be consolidating here for another week or so. So maybe by Wednesday or Thursday next week, we could either see this be breaking down or breaking to the upside. I am definitely leaning more towards this going to the upside, but that may not be the case. And let's see, I do have this Fibonacci retracement here, and so I am just going to leave up the 382 right there. That's around $101,000. We have tested that, hitting the low, it looks like on the 12th, of around $100,700, somewhere around there. And so I'm going to leave that 382 up there, but I'm just going to delete the 50% below us, just because, so far that level it has been acting as support, that 382. And so I will color this one yellow. Maybe it's a little bit, we want to be cautious to the downside. But what I would like to do now is actually do a Fibonacci extension. So going from the low here, from that pullback up to that high, and then actually just pulling straight down to the low for that day to see where the 100% extension lies. And it looks like that's around $113,000. And that, I believe, has a little bit of confluence with a level that I believe is around 115,000. I've been hearing that. I believe it corresponds with the tops over here in a prior high. And so that might be a level of resistance, which would represent, is that going to be like a 9%, or 11% move to the upside? But actually we're not trading at the low there. So we're, right around here. So let's see, let's just get a measurement, just being approximate. I think that's around, yeah, 9%. I did the mental math approximately right. So that's good. Yeah, so I do think that there is definitely some upside potential to around 113, but once we get up there, maybe 115, maybe we start to see a pullback, and from there, then there could be some more dip buying opportunities. But yeah, generally, I think it might just be another boring week or so of Bitcoin consolidating, crypto consolidating, maybe dipping lower, just to get people to panic a little bit, to regret the decision to sell before it does take off. You want to be selling into resistance, not into bullish consolidation here, or at least you just want to be aware that this could be going higher. And I will have to make a decision whenever we do get up to 113, if I do want to trim some while continuing to DCA in. That is something I'll probably assess during Crypto Corner this Saturday, though, because I'll think just a little bit more critically about my crypto positions. But anyways, I think that's enough rambling about Bitcoin, so let's switch over to Ethereum real quick, which is still trading, above $2,500. And so generally, I've just been really happy with Ethereum. And yeah, I mean, to be honest, it's like, I wish it'd pull back more because I really want to add more. I have been adding more, but I just like to add more lower. And yeah, but we're dealing with it, holding on to these gains. And if it does consolidate here, like these boxes, just like I drew with Bitcoin, this is 14 trading days here, over here. This is 14 trading days as well. This one, we haven't really, started to form the top until like right over here. So that's around the 10th. So let's actually just do comparison. This was on the 8th for Bitcoin. So it does seem like Ethereum's lagging Bitcoin a little bit, which is maybe not too surprising. But yeah, so from over here, from this candle, if we do just take, casual measurement, not getting too crazy with it, I'm just going to actually start it from the top here around 2,700 and then pulling back to these kind of consolidation lows. Let's just measure that out to about 14 bars or, 2 weeks. And so I think that maybe by, May 24th, whereas with Bitcoin, that would be around May 22nd. I think that both of these we could be seeing them taking off to the next level up. And so with Ethereum, I do have the 2618 up here, but since we're not really consolidating there, that is around $3,000, kind of being a psychological level, I might remove that 2618 from this just so we don't have that level there to confuse us. And then I might just do another Fibonacci extension here and also adjust this one. And that, let's see, the 382 is down there at around just shy of 2,400. So at like 2,362 is that 382 or 38.2% retracement there. But just like what I did with Bitcoin, I am going to only leave up that 382. And I am going to color that yellow just to kind of suggest that, it's maybe a little bit cautious if we do dip down to there. Just making sure, yeah, it's the 382. So very similar there. But then I also want to do a Fibonacci extension to kind of get an idea where this could be going on the next leg up. So from the high here of 2,700 down, straight down to the low, basically what we saw on that same day. Let's take a step back to see where that 100% extension is at. And that's around $3,400, just above 3,000, which is right, here where I got that alert. And so with this level, that does correspond with the consolidation over here. And that actually, excuse me, looks like some pretty interesting consolidation because it wasn't just, this straight horizontal consolidation here. There was, some dynamics within this consolidation. So I do think that would be some notable resistance. So good to keep in mind. And also while I'm looking at this, taking a step back, we can see that we do have lower highs over here. Maybe I'll just do that so we can see it a little bit clearer. Lower highs, whereas with the RSI, we have hit higher highs. So that is hidden bearish divergence. So maybe this does need to cool off. The RSI needs to cool off a little bit, and that could be happening, just over the course of the next week or so as this does consolidate. The RSI cools off, going from the high here of 84.81. Currently, it's at 75.43. So maybe we wait for that RSI to pull back below 70, get back into the the range here from 30 to 70. Above 70 is overbought. I think that we could cool that off just by consolidating here. But anyways, enough rambling on Ethereum. I think it could be hitting $8,000 by the end of the year. But between now and then, I do think that 4,000 seems like a pretty reasonable target corresponding with the tops over here. And now let's see, what's the next one on my list? I believe that is going to be ticker symbol URA, which is the Global X Uranium ETF, continuing to go up, close today at a price of $28.15, up 1.11% on the day, flat in the after hours, but up a little bit more in the overnight trading, hitting a high of $28.31. I do still feel like this could be rolling over a little bit, cooling off, maybe coming down to around 26, but maybe not. And let's see, what are some indicators that might suggest that? Just like I was going over with Ethereum, we do have the RSI up above 70 here. Currently, it's at 76.01, and that does look like that is a lower high relative to the highs that we saw over here. And with that being said, I might actually just delete that trend line so there's not too much clutter. I know that there is a lot of clutter on there, though. And actually, I might... I think both of those levels are kind of important, so I will leave them up there. But anyways, what was I saying? We do have the higher highs here, lower high here. That does look like we have, made a higher high in the RSI, and so that is also going to be bearish divergence. But actually just referring to the high over here, but the highs over here, the RSI is still lower than that. So the RSI here was at a high of 79.47. Over here, it's like I said, it's 76.01. So I do think that this could still be going up more, but I definitely think it would be finding a lot of resistance around 30, tons of levels up there. So it does look a little bit cluttered, but that's kind of the point, that we do see a consolidation of levels there, or a, not consolidation of levels, but a confluence of levels there. And we also do have a gap fill at around 30.53, so it might be some resistance there. But related to uranium, I wanted to follow up on Oklo because, with this one, I kind of traded my plan today. And so yesterday, that was regarding BBAI, but so I will talk about that as well. But with Oklo, I wanted to go over the plan that I traded, which I did go over in last night's overnight market prep. And that was that I had, I believe, some stop loss. I'm actually just going to pull it up on my phone so I can mention, pulling up the wrong thing. So I can go over what exactly I did today. So I did have a stop loss for the two shares that I had at $28. But I bumped one of those stop losses up. I had talked about it potentially finding some resistance at around 36. Really, that actually being kind of generous. I thought it might take a little bit longer to get up to that uptrend. And so where the lows for today, they were at around 34. And so I was thinking, well, that could be some, support or some resistance there. I'd be happy to take profits around 36, thinking that it'd take, a little while. So I bumped one of my stop losses up from 28 to 36. I probably should have moved it up to like 34, but I was at work and I couldn't really see the levels that perfectly. I just remember talking about 36, kind of, just doing a, line up here. It's around 36, okay, something like that. And, the reason why I did that is because if it did pull back to 28, my average share price is, $27.52. So I wouldn't be taking much of a profit if it did pull back and that stop loss got filled. So I wanted to bump one of them up. I bumped it up to 36 and that got filled. Unfortunately, but I got like a 30% gain. It's just one share, so pretty small, but just trying to get better at, trading with these stop losses and stuff like that. So if I do look over at the 10-minute time frame, we can look where it was at trading during the day. And so here, this did pull back down to just below 36. So maybe I should have waited to do my stop loss because over here, it went back up to above 38, hitting a high of 39.35 on the day. And so I think that, I could have not taken profits on that. But in the after hours, it closed the after hours trading session at 36.28. And then in the overnight, though, it is up to 37.70. As we can see, over here, it has gone up. So maybe that was a bad move on my part, but it's just, managing that risk. And now I have that one share. Average price, $27.52. I'll hold that up to 50 or whatever. Maybe 59, I believe, is the all-time high. We'll look at that in a minute. Let's see, 52-week high, 59.14. We can see that over here. But yeah, I just want to, hold on without any emotion, but not with a limit to kind of, push me out of the position. I want to be getting better with stop losses. So I'm just leaving that one at 28. I'm just going to leave it there. And then I do have a limit buy at 27 just to buy back basically the share that I sold today. And because, if we do go back below 28, my stop loss would get filled. I just buy that back at 27 apparently. And and so just looking at the chart though, what are some things that we can see that maybe suggest that there's some weakness here? And so what we can see is the big wicks to the upside here, hitting that high of 39.35. We do see some volume behind those moves to the upside, but then it pulled back a little bit. Then as price does start to bounce, we get back up to just shy of $39. But where's the volume? There's not much volume there. So it does kind of seem like a double top. And then we did get this pullback. So, while my limit at 36 was filled, maybe it'd be opening up lower than 36 tomorrow. So I do think it was, I'm happy that I took 30% profit and, I'm still holding a little bit more. So that is one of the, kind of plans that I had that I did trade that. And, I kind of modified that on the fly because I did not expect Oklo to be going up over 15% on the day, closing at 37.01. Up 15.55% on the day at 37.01, hitting that high of 39.36. So if you actually look at this, so from yesterday's close, this was at one point up about 22% on the day, but then pulled back there. So I think that what this could be doing, rather than pulling back like this to that green line at 27, and that is actually glad I mentioned that. That is why I have that level there. But actually, maybe I'd want to adjust that by doing a Fibonacci retracement. So I'm glad I'm, just walking you through my thought process because, it's new to me as well. But yeah, I had kind of drawn this doodle thinking that maybe there's like, an inverse head and shoulders pattern going on here, but it doesn't have to pull back to 27. Maybe we find some support here at 31 or so, where we did have a gap that was filled. We do have another gap now right over here based on the close from yesterday. On the 13th, it closed at a price of 32.03. So yeah, between 32 and 31, it does seem like we could potentially be pulling it back down to those levels, but maybe they act as support rather than pulling back all the way to 27. But also, I kind of want to, not, FOMO in, chasing a little bit of a pullback. I'd rather kind of see what are some other levels that, might make some sense if we do a Fibonacci retracement. So just going from that low of 1742 over here, that was hit on April 7th, and then going up to the high from today at 39.37, just going to make sure those are at the correct prices so they look good. And then the proportion, so the 382, excuse me, that's the same one that I was talking about with the other ticker I was just going over. I believe that was, I forget. I think that was Bitcoin and Ethereum, actually, the 382. And so that's right around $31, corresponding very nicely with that previously filled gap there, the blue line. So that kind of confluence of levels. Also with this gap here, So I'm kind of intrigued by that. But if my average is at 27.52, I don't necessarily want to be like raising my average, increasing my risk. So are there some other levels maybe that if we do break below 31, maybe I'd be interested to start adding more. And so at around 28.39, that's very similar to 28. If we go a little bit lower, the 618, that is at 25.80. And so let's actually just remove this so I can kind of see what do these levels kind of correspond with. So all of them correspond with like the consolidation that we saw over here. So I think that could be acting as support. This blue line, if I do kind of, just with the cursor, that does correspond with the tops over here. And, maybe that's an ugly head and shoulders pattern, left shoulder here, head, and right shoulder, and that would suggest a measured move to the downside, but I don't really think that's what this is. And but there are these levels here, so I'm just going to leave my limit buy at 27. I don't expect it to get filled, and I don't expect my 28 limit buy to get filled here at that 50%. That is at 28.39. So yeah, I'm just going to be chilling with that. I will make this yellow, and I will remove that 618 because I don't think we're going that low. But if we do, I'll be aware of it because 27 will be hit. So I'm just chilling with that, trading the plan. And this is one that I'm excited about because I kind of went over a couple things with BBAI yesterday. So this is Big Bear AI. And this closed at a price of $3.85, up 8.15% on the day. And we did fill this gap up here at 420. We can see that gap that was formed over here. We closed on March 6th at a price of 420 before gapping down following earnings. And we have now filled that gap. So with that gap being filled, I can make that line solid. And we hit a high of 437 on the day. And yesterday, during the overnight market prep, I had mentioned, that I'd be taking profits at around 10%, which corresponded with 420. I did that. I trimmed there. But then also 20%, which I think was getting into like the 450 range. So that was not hit. But looking at this, I actually closed my position basically at break even. I trimmed one share at 420, and then I forget how many shares I had. I think 5 more remaining. I trimmed, just down here because this big wick to the upside being a red candle. So if we do, a little bit of measurements here. So from the low here to the top, we can see that halfway point definitely closed in the bottom half. But then if we take another, measurement here, we can see that we closed in the bottom quarter. And so that makes me think that's a little bit of a topping signal with that big wick to the upside having penetrated that gap fill level, but having gotten rejected from it. We did pull back, potentially finding support here from the highs that were hit on April 28th. The highs on that day were at 379, so got that level marked here. I have it marked as red because I thought that might be resistance, but we blew past it, gapped up, and I was actually wondering if we'd form an island gap, which would be, we have this gap down, form this inverse head and shoulders, and then we gap up and continue leaving this gap or this consolidation to the downside as a little island. Maybe if I do remove the drawings, you can see that a little bit better. Gap here, that's not filled. We opened here, and if we would have continued up, that would have been another gap there, but we didn't. We got rejected. And so with that being said, that's why I decided to just trim at a, at break even, close the rest of my position, I should say. But let's look at what I have in my position over here. I actually don't have a limit buy anymore. I did have one at 291. And so I kind of wanted to reevaluate where I think this could be pulling back to and then maybe place a limit buy there. But really what I'm excited to share with you guys about BBAI is the contract that I was holding, and I took profits at my level. I followed the plan. I traded it and I sold at basically the high for the day. So this is the BBAI $10 strike call that expires in January. So, I like to have the contracts far out into the future because I am learning. Good for me to be cautious with them. And so I had a position, I believe, at an average price of 49 cents. And unfortunately, the way that I'm able to trade these contracts, they have to be in 5-cent increments. I'm actually kind of surprised that my average is 49 cents, not 50 cents. But 20% was 60. And so I had a limit sell at 60 cents. And what was the high for the day? I don't know if you guys can see it, but let's see the high over here. Also, you can see it here was 61 cents. So I sold a penny off of the high, took 20% profit, turned, I believe, $250 into $300. So happy about that. And now we're pulling back to, below my average. I did have a limit buy on this for 30 cents, but I decided to remove it. And actually the low for today was 40 cents. So that would not have been filled, but I kind of wanted to reevaluate re-entering this based on the chart. But I guess I kind of also want to pull up this data in unusual whales just to see what that looks like. So what's the one we're looking at? So BBAI ticker here. We can see a $10 call expiring in January. And so over here, we can see, I just wanted to look at this, the high, very clear there, traded at 61 cents. The average was 49 cents. That was my average, and I got out at 20% above it. So I feel pretty good about that. And let's just see, I believe right at the open, yeah, we can see that here. I don't know how well you guys can see that, but right at open in the first 5 minutes of trading. And if we do look at this, maybe on the 1 minute time frame, we could see the first 1 minute of trading. We see, 37 contracts traded on the bid side, 214 traded on the ask side. And so I was about 5 of those contracts I did sell at, average fill was 47 cents, but I managed to get my fill at 60. So that's actually pretty remarkable. I don't really see it up here. I'm kind of surprised how that happens, but you can see the yellow dotted line. Oh yeah, so I'm thinking about this as, I'm just going to move this back over to the 5 minutes so we can just see them a little bit better. But I was looking at the candles where they were going up to, but really what we're looking at is the yellow line. So we do have the high here. That was at average fill, 59 cents. So yeah, I mean, I was, right in there. So I'm just really proud about that. Wanted to share it. We do see that the net call premium did increase by about $850,000, whereas the net put premium decreased by about $10.6 thousand. And so generally, I mean, if I do expand this, we can see this is net bullish. So maybe I could have taken more profits if I had held, but I don't want the risk. I want to take the risk off the table, and I want to reevaluate the chart for a possible re-entry, because while I don't think it's good to be selling and then buying back into positions, if you're looking at, based on my doodle here and also based on, I believe, Colin Gladman, the Bronx Viking, as well as Mr. Chart Norris, all accounts I follow on X. I'd encourage you guys to do the same because they post great charts. They were all posting about this inverse head and shoulders pattern. I had seen, Mr. Chart Norris posting about it. And then today I also saw Colin and the Bronx Viking posting about it. And so, I mean, this is generally just like a really nice pattern here that I think could be going to the upside. But with this big wick here, I think it's probably going to be pulling back. And so I think it would be good to reevaluate some levels that it could be pulling back to, maybe to reestablish a small position in, and then maybe to consider swinging that same contract again, because I liked it. And so over here, let's see, that is the low of 296 to that high from today of 437. And so let's just look at these levels. Let's consider them. So I'm going to lock that in place so it doesn't move. And yeah, I mean, we do have the 382 at around $3.83, right around where it's currently trading at. Maybe that acts as support, but that's not really a pullback. And my average was right around there. And I'm thinking it could pull back a little bit lower. we do see the 50% at $3.66.5, 365, 370, 369. Somewhere around there. So maybe that's a level to reestablish a position. But what I can also see is this gap here. So the closing price on the 13th, which would have been yesterday, Tuesday, the closing price was at 356. And so with that being said, I'm just going to lock that into place so it doesn't move, make that a dashed line because there's a gap there that has not yet been filled. I'm just going to make it blue because that's what I tend to color my gaps as. And so that's 356. Let's see where this 618 is at from this Fibonacci retracement, because I feel like the 50% or the 618 are going to be levels that I would like to consider. So that's right around 350. And so maybe a good level to consider reestablishing a share position, and then maybe look at the chart more closely and see if I'd want to get back into some calls. That would be at a gap fill level, in my view, of 356. But actually, maybe that gap doesn't get filled. Maybe that gap gets left behind. Because I think, people like me, retail traders, they're going to look at this and be like, oh man, it's a blow off top and there's a gap here. It's going to pull back to that gap. I'll just re-enter at that gap. But then that doesn't happen. We do have this, bigger picture inverse head and shoulders pattern. So this does look like it's going to go up. So maybe 366 is a good level to consider getting back in at. I would do 369, but I think that this is probably going to go lower than this level here. Actually, no, maybe I'll do 2. Because it's just a couple shares, no big deal. So maybe I'm just going to put it in my notepad here, 369, and then also let's see, what would the average be? So if I do 366, just getting 2 shares, 1 at each, that would then make the average an odd cent. So I'll do 365, which would then put my average of those 2 shares, pretty boring, I'm sorry, at 367. So I like that. I'm not placing it now, but I probably will after this stream. So yeah, that's kind of my plan, to get out here, take profits on the calls, and then, when considering, I'm actually going to remove the 382 because I don't think that's going to be too important of a level. Maybe it is though, and then I just miss out, I forget about it, so no big deal. But yeah, I will have to place those limit buys just to keep it on my radar. But, also, though, you don't want to fall in love with charts. Maybe this is a failed pattern. So, yeah, then if I do re-enter, what will my stop loss level be? I think that is something that's important to consider. And, this is something that I can't really do in Webull, I don't believe. Okay, yeah, so I think I can here. I've actually never done this before. And so let's see the long position. If I were to go long here at like 366, oh, cool. I've never done this in Webull before, so pretty cool. So I was thinking, maybe I want to actually drag this over here. I was thinking that I should have the stop loss be, at the lows over here. So that's at like, let's see, 296. So I should do a stop loss at 296. Okay, and then what would my take profit level be? Maybe that red line, 479. And that would suggest that, my risk is, 17% to the downside, I believe. And then my upside risk is like 33%. So that actually seems, I could have it better, more in my favor. But then it would be putting in a lower low here, whereas here we have higher lows. So I do think that's like kind of a good way to consider this. And I've actually never used this tool before. But, I could also consider it. Maybe it'd go up to 10 as it was up there earlier. But yeah, generally, if I could just extend this up here. If it's a small position, who cares? That's, 180% move to the upside. So yeah, I think that this is worthwhile to me. So I will, I like that. And I'm glad I experimented with with this. So hopefully that was helpful. And that was, with this long position, you can do the same type of thing in TradingView. I actually just learned how to do that in TradingView. So very cool to plot it over here. So hopefully that's helpful for you guys. The next one on the list, I try to put less tickers on here so I ramble less, but I like to, just break down my thought process for you guys. So I hope that's helpful. But let's now move on to the next one on the list, which is Webull, ticker symbol BULL. Did close on the day at 1352, down 3.4%. And the after hours price was 1362, 1348 trading in the overnight. And so what I did is I added more aggressively to my position now. And so I'm just going to pull it up on my phone so I can relay what I have. So I just have 3 shares, not a lot, but more than, I think the 2 shares I had yesterday. And so my average fill is at 1369, having fun with it. I mean, to be honest, it just coincidentally, by trying to accumulate a little bit more today, I ended up just with an average of 1369. So I feel like that's a good omen. We did, it looks like, pull back to test 1340, hitting a low of 1326. So that's actually getting pretty risky. I do have a stop loss at 1292 and 1298. And so the reason why I have that stop loss is because we hit the lows over here of 1309. And so I don't want it to go lower than that, but maybe we sweep the lows, maybe we go down to 13 because maybe people have stop losses at 13. So it's like, oh, well, I'll just move it a couple cents lower. And I just have a stop loss there for 1 of my 7 shares. I just reevaluate because, there have been some encouraging posts from somebody who's actually on vacation now. And so I'll just pull that up. And so I was going to go over this from the Bronx Viking GameStop. I'll go over that towards the end. So I'm just going to open up another tab. But then I'm just going to pull up over here. This is Mr. Chart Norris. And so he was posting a lot about bull today. So 7 hours ago, he wrote bull fly. I'm going to like that because why not? He said, bull, you are beautiful the way you are. 9 hours ago, I'll also like that. This is some advertising, so let's skip that. And then responding to Yo Whiskey Daddy, I don't know what he said. It will be like bull. What's he replying to? But Mr. Chart, bulls suck. Nope, it doesn't. I like that as well. And then he says, will it be like hood? It will be like bull. Slam. I want to reply. Actually, I feel like I bother him a lot, so I'm not going to reply. I do post a lot. And let's see. So yeah, got to like the stuff. Make sure people know that they're appreciated. And so here he was saying, bull weekly candle chart hammer and, big hammer upside. And then he's talking about this rolling over, kind of trading in this range. If you don't get it, I can't help you. And so this really just reminds me a lot of this would be like the demand zone at the bottom around 1356, whereas the supply zone would be at the top of that range, which it's tough to see here, but we can pull it up on my chart. This is what he's talking about. And so I've been learning more about these Wyckoff accumulation patterns, largely because of the free Wyckoff's channel, which is run by Rico. And he just breaks down a lot of really nice analysis. He did some on GameStop, so we'll have to pull that up a couple tickers from now once I do go over GameStop. But he's saying enjoy it, bull. And then so where are we at with bull? And so with this, we do see this, the top there is around, let's see, 1882, the bottom here, 1356. So that's a pretty nice swing. So this range here, the range here, the bottom is the demand zone where people want to be buying. And then up here around 1882, that's the supply zone, or really getting up to around 1676. Up here, I'd say that's kind of the supply zone because of the top here, that range. That's where people will be supplying shares. They will be selling. And so that's kind of just a nice swing trade range from what he's posting, from what I'm understanding, how I am learning. And so that's basically like this. And then so, where are we at? kind of in regards to this. And so kind of doing a comparison there, I feel like we could either be here or here. Or sorry, either here or here. So what might be good to do is trim a little bit up here and then, see where it goes. So what do I want to draw up here? Maybe I want to do, actually, maybe I'll do that in a second. But yeah, what he was drawing. So I got 24 up there, but Mr. Chart Norris had a level, let's see, right around here, right around 18. And so let's see, from where we're currently at, if we do go down to, let's see, right around the low there, and then, oops. And then if I just drag this up to, what am I thinking? The highs here. Right around 18 bucks. I'll make that more precise. And, just being our average here. Let's see, I should adjust this to what my average is. Hopefully this is helpful for you guys. And if it's not, if you don't like my extensive rambles, just let me know in the chat and I'll check it shortly. But yeah, if I have a stop loss here, I'm just going to adjust it from here. So account size, no, not 1,000 shares. I'm not big money. Let's see. Entry price, $13.69. Profit price, I'm just going to do 18. And then stop price is $12.98. Done. And so downside risk is about 5% for me, for my average. Upside potential is around 30%. So that looks really nice. But then that could also, break out. So maybe it would be good to hold on to a couple runners. So if I have, like 4 shares, let's say, just hypothetically, 30% gain, selling 3 of those for about 30% would mean that the 4th share is basically house money. So selling 3 shares at 30% profit means I am making profit about the value of 1 share. So then I could leave that remaining share as a runner as this goes up. And I'm just using the 4 shares in total, trimming 3 shares at 30% profit, just as an example for the easy math. Trim 3 shares, bring back gains worth 1 share, hold that 1 share as a runner, and maybe it goes back up to 80. And then so that's a really, really nice swing, or maybe it stops out at like 24. And let's see, just to move up to there, that's a 70% swing, moving up to, the highs here. That's over 400% swing. So yeah, I just think that this looks really nice. Mr. Chart Norris is giving me a lot of, confidence with this. And I also did see some other posts on Bull from one of my other favorite, ex-posters. Actually, just going to come back here. And so from the Bronx Viking. And so he was posting something on it, I believe. Let's see. Yes, someone feeling bullish. And so this is just some premium data from Unusual Whales. So what we can see, this is the $15 strike call that expires in August 15th, on the 15th. So 93 days from now, about 3 months from now. And so we can see this massive candle here. Ask side over 3,200 contracts, it looks like. And the average fill looks like it was 168. So let's do some math. And this is all just kind of approximate, but let's just do some math here. So with that average fill being 168, $1.68, but times 100, the average fill per contract is worth $168. And if they bought, let's just go with the ask side. So not the full candle volume, which is 3,500. Let's just do the ask, or approximately the ask. So let's multiply that by 3,200. Let's just round down, be conservative. And so that is about, $500,000 potentially going long. The majority of the premium traded for this contract on the day today, the 14th. And then so what we can see in the net call premium over here is that we did see net put premium, it looks like in red, going up. So net premium up here, I'll actually pull up the chart of this so we can look at it. But very interesting that call volume for this contract, which I imagine is why we see this spike in the net call premium over here, that was actually negative. And then this massive purchase pushed it up by a lot, but the net call premium was still negative. So this does still seem to suggest that, it's not necessarily super bullish just yet. Maybe it's still potentially forming a bottom. But we could look over, I don't need to change, I need to change over to here. Let's do contract lookup for, just unusual whales here, pulling that up, flow data, go to the flow feed. I'm just going to clear the search, type in over here, bull. And so that is going to be for today. I'm just going to limit it. Oh, actually, that's not today. Let's see. Clear. Oh, man. So got the bull. Let's do the range. Today was the 14th, so I'm just going to limit the range to that day. And then let's limit. Why is there nothing for today? I don't know what's going on here. So let's just do bull. Okay, so we got a bunch of stuff here. Time range. May 14th, right? It's the 14th. There should be stuff. Yes. Okay, that's weird. It's weird it wasn't loading before. And then I'm going to put the minimum premium to, let's say, 100,000. And so we can see, where that little cursor is. That's, marks the comma. So that's 100,000. And so we can see, what I want to find out is, basically just this data here that Bronx is posting, $15 call, 815. How was he able to find that? And so we can see, all these purple Ks, all the purple numbers here, that corresponds with the volume for the day being larger than the open interest. And I believe that's the same, but with premium for the day. So that's why those Ks are purple. But what we can see, the largest contract was 2,400, and that was the $15 call that expires August 15th. So that is the correct contract. And that one looks like, hey, all bullish. All of these that are over 100,000 in premium that we can see here. So this one's 123,000. This one's 238,000, so on. This is the largest one, about 410,000. All of them are net bullish. And this one is actually a call on the ask side. So I'm kind of surprised that that says bullish because it does look like it's more bearish over here. But that's because, let's see. Yeah, I'm surprised that this says bullish. I'm not really sure why. But anyways, let's dive into this contract. So we see the same data that Bronx was looking at. So over here, he's looking at, this is going back, 30 days, I believe. So let's adjust this to go back 30 days. And we actually see that alert here. So this volume has exceeded open interest. So open interest on this contract is just above Ed's head. So I'm going to scroll down a little bit. The open interest at the start of today was 889 contracts open, but the volume then got bumped up, 4,500 contracts. We'll see if all of those are open. That's why we saw this alert here. And then that volume here, this really big candle. And so, yeah, total premium traded on this contract for the day, because he posted this prior to the day being closed, $773,000. So looking good there. But let's just go back past 30 days. Maybe this is looking similar to what he has over here. April 2nd there. April 2nd there. So looks the same. Do you see this big spike? And we actually ended the day with net call premium positive $68,000, whereas net put premium was also positive $369,000 up here. So that doesn't necessarily suggest it's super bullish, but if we do expand this, yeah, we can see that the majority is on the bearish side, 47%. and that's because of all that net put premium. But generally, we do see a whale move, a buy, that big buy. Here, that's what you want to look. You don't want to see, you see incremental increases, whether it's calls or puts. That just means retail is, adding or selling. It doesn't really say that much. But when you see a big spike like that, let's just look over here at the 1 day again. When you see a big candle, concentrated buy there, that suggests that, that's a whale. And so that's a little bit more notable. But yeah, I've been rambling on about that. I got a couple more tickers to go over. I did want to go over ChargePoint. I still have some shares, and I have had a limit sell and a covered call, 50-cent strike that expires this Friday, and I've had a limit sell at 22 cents placed on it for the past few weeks. And so with that sell at 22 cents, I'd get 22 cents per share in premium. And so per contract, that's 100 shares, that's $22. And if it closes above 50 cents on Friday, I would then get 50 cents per share back. And so that's $50 per 100 shares. So I would effectively be selling 100 shares at 72 cents, which was the high over here on April 28th. And so I've lost a lot of conviction in ChargePoint, not necessarily in the company, but really just in the speculation in it and just being bullish and more confident in Tesla than a more speculative, in my view, company like ChargePoint. And so I have been looking at, 72, I wish I had sold back there. So that's why I do that covered call with that 22 cent premium with that strike at 50 cents. I closed it today prior to it having been able to get filled, but the high for the day for ChargePoint was 71.97, 71 cents, 71.97 cents, almost to 72 cents. But I didn't. I closed the contract because I thought, hey, maybe there's potential for it to get above 72. But maybe it doesn't. So what I actually did is I placed limit sells in increments going from 71 cents up to about 75 cents. Thinking maybe it could be getting up there, but maybe not. And so I did sell 100 shares today at 71 cents just because I want to be consolidating my portfolio and I don't want to just be holding the bag on positions forever. I want to, be accepting losses at tops like I could have over here. 71 cents is pretty close to that. So, I'm all right with it. But then I started to consider, we do have these wicks to the upside potentially on both of these days, because at the time I was at work looking at the chart, and maybe there's not this wick here for the day. But if we do put in another wick to the upside, that might be suggesting some weakness and that this could be rolling over. Also, as we can see now, volume has decreased a little bit. While we did put in a higher close, yesterday's close was at 69.39 cents. Today, it's a little bit higher than that, up 0.66% on the day. But with these two wicks, that got me thinking, maybe it's going to pull back. And so I actually placed a stop loss for the day that would close at close because I wanted to reevaluate. But now, unfortunately, if I look at the 10-minute time frame, we've pulled back to around 66 cents in the overnight trading here. Actually, the after hours trading, because it's not currently in the overnight trading, down, closing the after hours session at 66.21 cents there. Exactly, basically at that line, pretty remarkable at 66.20 cents. I should say 66.2 cents. Pretty remarkable. And that is based on, this historical low that we hit on February 11th of this year. I just had that going across, kind of acted as resistance here, resistance over here, some support here. Seems like a pretty notable level. And so we pull back to that. And so the reason why I placed the stop loss at 68 is because, to be honest, I want to be selling at 72 or higher. Really, I want to be selling at like $1.68. I think that's my average, or higher. But I also don't want to be waiting for it. And so the reason why I decided to place that stop loss, which did not get filled, was because I was just looking at the chart, the 10-minute chart during the day, and I was just kind of trying to consider the volume and the price action. So initially, dips, bounces up to the high of 71.97 cents. And with that surge, we see pretty high volume, so that looks good. Then it pulls back, forms a higher low. That looks good. Then it bounces, but to form a lower high. I don't know. Maybe that's consolidating a little bit. Maybe that could be bullish consolidation. Maybe not. I don't know. But the volume behind that move, not really there. Not like it was over here. So I started to think maybe that's a little bit weak. And then it starts to pull back over here. And I think around this time is when I placed my stop loss at 68 cents because it's maybe going to be putting in a lower low and I should just protect myself to the downside. Yeah, it was trading around, where it's currently at, or where it closed at, around 69 something. I'll just protect myself to the downside because I don't want to see it going lower than the low from this candle. And so from this candle, first basically 10 minutes of trading, the low was 68.14 cents. My thesis, I don't want to see a lower low. 68.14, what do we see over here? 68.13, that's a lower low. Starts to consolidate. I wasn't paying too close attention because I just had that stop loss, and it'll close out. At the end of the day, if it's not filled, then I'll reassess. Unfortunately, it's pulled back a good amount. I don't know if that's on news or anything like that. 4 hours ago, ChargePoint Holdings rises higher than market. Key facts, it sees 19% price increase. So yeah, this is kind of old news. But yeah, I just wanted to share that because I did I accepted a little bit of a loss up here, close to the highs. And I kind of had a thesis for it going higher to trim out, being above 72 at that point. So I'd feel good about that. But if it did pull back, have that stop loss at 68. Unfortunately, it's below there. I don't know that, I'd have a stop loss at 66 because at this point, I think it could maybe be reclaiming this purple downtrend, find that as support, also corresponding with this gap fill. So the close on May 9th, so I believe that was last Friday, was at 61.98. Got that marked there. So I'm just going to make that a dashed line because it's a gap that has yet to be filled. And yeah, so that's right there at 62 cents. Let's see if there are some fib levels that maybe correspond to that, or maybe, yeah, like the highs over here, the consolidation highs, so not the wick highs, but, where a number of these candles and wicks overlapped just below 62. So right around that gap fill level, maybe we see a fib level to around there. And so I'm going to draw this based on the low here of 58 cents up to the high from today, which was 71.97. And so those levels should be correct. And yeah, let's just look at those. So the 50% is around 65 cents. Could be pulling back to that. 618 is around 63 cents. And then the 786, that's pulling back to around 61 cents. So we do have a number of levels down here. We do have this consolidation here that could be acting as support that also corresponds with the consolidation highs over here. So yeah, there's a lot of support down to around 61 cents. So what I could see happening is a rejection here, unfortunately, closing above that level, but it looks like we're pulling back. I could see this pulling back down to any one of these levels, maybe finding support around 61 cents, and then ideally taking off, maybe to bump into resistance here. And then I'd want to trim at 72, 73, incrementally up, something like that. Or maybe I'd sell a covered call. I don't know. But I just wanted to share that. I think that's pretty interesting. I do think that this could be pulling back, though, to at least 63 cents is what I would bet. But maybe 65 cents holds. It's actually, in the after hours, not too far above 65 cents. So I might remove that 50% retracement just because, we don't want to be too aggressive when buying such speculative stuff. And for me, I'm not buying anymore. I'm not adding anymore. I'm only trimming to the upside, and I'm just going to wait for it if it does pull back. And then the last one, Massive ramble. Similar to ChargePoint, though, is that there is a potential topping signal in GameStop, closed at 28.73. I do have this level here at 28.90, hit a high of 29.39 with a big wick to the upside, closing a little bit lower than the midpoint, but below 28.90, which was the opening price from February 14th, so the Valentine's Day open. And that level was rejection over here when we hit a high of 29.80. We hit a lower high over here, also closing below that level. So it doesn't necessarily look so great there. We did see a lot of volume over here, but that was, selling pressure because of the announcement of raising capital, I believe. Big wick here, much smaller volume, but not a massive candle spread there. And I believe Roaring Rico, from Free Wyckoffs, was talking about this, how the candle didn't have a really wide spread, but the volume was pretty elevated. So that's actually kind of odd to see, because if you see a big move in volume, you want to see a big move in the candle, a big spread. But, it opened here and closed lower, and then following that, there was the announcement of either dilution or capital raise, whatever it was. Saw a gap down, big red candle down to support here. And so we're at that same level. We are now hitting lower highs, also lower highs in the RSI, so maybe that's good. Over here, we were hitting higher highs, also higher highs in the RSI, so there's no bearish divergence there. But yeah, that level has just been kind of notable. So maybe it's a level to trim, I don't know, with the plan of buying back lower. And so I do have this Fibonacci retracement here. I should probably adjust that. So let's just move that over to today's high. Just going to make sure that's right. That is a high of 29.39, a high of 29.39, and then the low of 20.73. But let's adjust that. I don't think the pullback would be necessarily coming down to here. 50% retracement down to 25. I don't think that would be happening. I think that GameStop has actually been looking pretty bullish regarding the options and stuff. So I feel like worst case scenario really coming down to 26, but the 236 is around 27.35. We also do have a lot of consolidation here, like the consolidation highs. Let's see if I do draw a horizontal line, really just with the close from April 22nd, 27.80, so right around or just below $28. So let's just make that a thick line, and that be, I'd say green. I mean, it's GameStop. Who doesn't want more GameStop? So if this pulled back to 27.80, maybe that's a dip buy. Or maybe the 236 here, maybe that's a dip buy. I am going to make that green as well. 27.35 is the 236, and then 26.08 would correspond with higher lows. Higher lows, higher lows. Still higher lows, just by a little bit. 26.08 is that 382. So all levels there. And for me personally, I was thinking, well, maybe I should trim some of my shares. But, I don't really want to do that. I don't have as many GameStop shares as I'd like. So what I'm doing is I have a limit buy at 27.25. I had not done this retracement. And so what I should probably do, what I'm going to do, I'm just going to note it here, is I should make that dip buy, not at 27.25, and it's just one share, by the way, nothing crazy, 27.35. So yeah, my average is below that. My average is 22.60. And so yeah, I could get one more, no big deal. And because the reason for that, why I'm not trimming the shares here, is because I do have a call that expires next month that I feel like is going to be going to zero, and I have been trimming that yesterday, today, just one of them, one contract, but over here, that is the $80 call that expires in June, so next month, closed at 34. I trimmed one at 40 today, and I do believe I have another sell at 35, just another contract. I think that this could be going up. My average for it, let's just see, I'm going to pull it up on my phone so I can share with you guys, just reading it off. My average is 31 contracts at 70 cents. I'm probably going to lose money. Well, I am losing money on that. but it's not closed out yet. But maybe it doesn't go back up to 70. The top's over here right around 70. So, maybe it could go back to there. And ideally I'd be taking a 20% profit at least. That would be 84, which is, right here. But it could be going to zero because I don't expect GameStop to be at $80 a month from now, but maybe we could see like a squeeze and then a pullback or something like that. And so that's really what the thesis is on GameStop. But the reality is I'm probably going to lose money on that. That's part of the price of trying to learn options. And I am, just a retail trader trying to have an edge, trying to learn a little bit more. But I should pull up let's see, the Bronx Viking had posted here. And so I reposted this. And what you can see is that, he's saying that GameStop almost at 2 million in net call premiums. First, it's the put selling, then it's the call buying. And so what we can see is the net call premium at that time was up about, 1.94 million. And then, I posted this fun little graphic here. I said that, at that time between, and that time between is theta decay. So first it's put selling. That's suggesting that a bottom could be in. Then it's the call buying. That could be suggesting that it's going up. Because if you're selling something, you're not worried about premium changing after you sell. But if you buy, like if you buy when the puts are being sold, then you might have to deal with some decay, theta decay, which is in time, the price of the premium for those contracts is going to be going down over time. And so that's why you want to wait for the call buying. And so that is starting to happen. And so then I just wrote here, and that time between is theta decay, like I was just talking about. So early bulls pay the price if they long when bears close their puts. Look for the bear whales and pounce on the bull whales. And so here is a bull whale, or a bear whale. Here is a bull whale, and there is a kitty whale. And so I'm not going to like that because I posted that. I made that. But yeah, just having some fun there. And what we can see for this contract, if I do pull it up, so this is, so we can just look at GameStop generally. So I'll just pull that up over here. One of these contracts, not one in particular, but just because I want to see this data over here. So net call premium, we can see it did go up by over 2 million on the day, but it did pull back some. So it hit a high of around 3.5 million, but pulled back closing the day up $2 million, whereas net put premium closed the day up about 676,000 or so. And we can see that up a little bit there. But anyways, I've talked a lot about this. I feel like there was something else I wanted to say about GameStop. Oh yeah, the free Wyckoff video. So I'm just going to pull this up here so you guys can see where it's coming from. So just going over to my subscriptions, maybe I subscribe to some junk, so do be cautious of that. I'm just going to turn my volume off in case this does play, but nope. Okay, so I can just do a share, and so you can see this on my channel if you do want it. Possible GME. I'm going to do it with a hashtag because the YouTube doesn't really do the cash tags. Possible GME could be pulling back, so there could be a nice opportunity to buy lower if it does dip, or just to be prepared. Yeah, ... I'll just leave it at that. And so you guys can see that. And now I'll just pull back to the charts and I'll open up the chat again. Sorry for my massive ramble, but hopefully there's some value there for you guys. We're just kind of breaking down my thought process. Jeff Travels, following up on Finger. So I'll just pull that up on the ticker request live. I do still have that here. So yeah, I mean, it could go back up to 5 tomorrow. But there's a post on this that I'll share with you that I I think that this has just had a massive move. If you're in it with an average down here, sure, maybe it could go back to 5. And, your risk is your losses down here. So I think that's, I'm just actually going to delete that because that's not relevant anymore. But yeah, I do have that uptrend. I still think that this could be pulling back to 3. So, if your average is above 3, like if your average is at the closing price of 457, I think that's really risky because I think that this could pull back to test that uptrend. And maybe, clearly the doodle is not correct. So it'd be pulling back from up here. Maybe it pulls back to that uptrend over here, and then that's around 315 or so. But yeah, could it go back up to 5? Sure. I have no idea. But is it really risky, especially to be entering here? Yeah, it's really risky. And so this is actually a post that I believe I retweeted, not from the Bronx Vikings, from another favorite of mine. And so this is actually from Volatility. So I'll just break down what he was saying. And so latch on who? I don't know what he's referring to. He was referring to, oh yeah, excuse me, AMC. I'm just destroying other communities that want to latch on to us to scam apes. F them. Have to cleanse these communities and restore balance in the universe. I don't know what he means with that, but that guy's always pumping, trying to get people on board with AMC. And so Volatility posted, latch on who? AMC, you said. So AMC has been malnourished and emancipated by none other than its silverback, Adam CEO. CEO Adam. It's literally at 76.5. While Finger community, so it's down, it's negative. While Finger community has been well fed since it rose 270% in the past 3 months, whereas AMC declines 20%. Totally valid. You actually sound dumber than yesterday. So not my comment, that's his comment regarding this guy trying to pump AMC, GameStop, whatever. So we can see Finger up a lot, kind of risky, whereas AMC down a lot, kind of risky, but lower risk since it's, pulled back in that sense. And so I commented, but 50% off Wednesdays, kind of making a joke because AMC now has 50% off Wednesdays. So having a sale of 50% off doesn't really give me that much confidence. Like, why do we have to put things at 50% off to get people into theaters? I know it's a Wednesday, but still. And so today, Junior, because today's Wednesday, I thought that was funny. But also, people have been pushing Finger lately, so I'm thinking the top could be in on that one. Those are just my thoughts. And then Volatility responded, right on Finger, hit the trend line roof on the weekly. So let's just look at that chart. That looks like some notable resistance. So yeah, I could see it pulling back to at least potentially, I guess I should say potentially right around here, which is, sub-$3 range. So let's see, just on the weekly, that's how we drew that. Just kind of copying them here. This is like the 2021 highs. So this is, 2021, beginning of 2021. Yeah, so right around there. I don't think he includes all the wicks, or maybe he does, or maybe he's just looking at this on the log scale, probably. Yep, looking at this on the log scale, let's see. Is there a trend line? Just doing it with the close for that week, and then over here. Yeah, could it be at 5? Sure, but it's at a level of resistance. You don't want to be buying at a level of resistance. You'll want to be trimming or selling at a level of resistance. So I don't think that there's any significant upside move, but I do think that there is a significant downside move. So very cool. And I'm actually going to take a screenshot of this and just say thank you. So recreated that during a stream. Recreated that on the log scale. during a stream. Very nice. Thank you. Handshake. Can I do that as one word? Yes, cool. So, got to share the love. And, oh, wait a second. Where did I post that? Actually, dang it. I'm just going to, dang it. Let's see. Recreated that on the log scale during a stream. Very nice. Thank you. Handshake. And then I'll delete that one. Oops. Cool. Yeah, I forgot to paste it. But so anyways, coming back. So Saul's got some comments in there. Good day. Hopefully you're still here. I've been running this kind of long. Still holding long and strong charge point. Nice. I would think, though, that, just coming back to pre-market prep, that, like I had mentioned, I think that it could be, this is on the weekly and also on the log scale. So I usually just do my stuff linear. Maybe that's because I'm a rookie. But yeah, I mean, I could see this coming down to like 63 to 61, something like that is my thesis there. So it could be some dip buying opportunities if you do want to go long and strong, or, if you just want to brace for that pullback, whatever. So hopefully that analysis was helpful. And awesome, Saul, I'm glad you think the rambling is valuable. And then, yeah, I will definitely throw up applied digital for you. I'm just going to put it over in the TRL list. Yeah, let's see. And then I should be closing the stream down here in a minute because, oops, I'm typing in TRL, applied digital, just because I got to be at work a little bit earlier than normal tomorrow. And, ooh, this is nice. Very cool. So let's see. I mean, with stuff like this, I'm always like overly cautious. From the bottom here to the high from today, that's up 90%. So potentially risky there. Let's see, are there any levels that it pulled into? Yes, I think that it came into some notable resistance. And actually with this, since this doodle failed, just to clear up the chart a little bit. Yeah, I will just do that. I'll leave the other levels, and this one, though, I'll clear up that doodle as well. You could probably see it. I could just, the lows here, or actually, no, it's probably just the lows here. Oh, and actually, what's this? What does that go to? I'm going to delete that. I don't know what that goes to. But yeah, so just looking at here, so like 597 here. Spoiler alert, I don't know what the price is right now, but 597 was the low over here. And then let's see, the low over here, January 27th, was 612. So right around $6, kind of makes sense. And the thing that I picked this up from going over the crypto charts, rather than doing the lows, which, the low here happens to correspond with some wicks over here. But just in case, it goes a little bit higher, goes a little bit lower, whatever, I'm going to do it with like the consolidation lows. So I'm referring to that as, I don't know if that's a thing, but just based on, the close over here. Then we saw another wick below it, but a close above that level. And then an open here and a close above. Pull back, open right around that level. So we've seen some consolidation around that line. Also, we saw some consolidation over here. So with this being support, a little bit of a fake out break here, that makes me think that this is a pretty notable level because it was respected over here, was respected over here. We got a fake out break, but it was respected over here again. So that makes me think it's support, but since we were below it, actually, I'm just going to make sure that is the the closing price from that day, 590. Wait a second. So the closing price, 645. Yes, so I do have that marked right. But since we are below it, or were below that level, I guess are still below it, I'm going to mark that as a thick red line, suggesting that there's some notable resistance there. And look, we did break below that level, bounced, retested, it got rejected, moved down further. And then from that, I can do a Fibonacci extension, just having fun with this stuff, just a little bit of an exercise here. See, where did that, go to? From the highs here, 100% was 361. The lows here, 331. So that, I could actually, maybe it's not just from that bounce, but from, the highs over here, 353. So right around, kind of predicting the bottom there. So that's pretty cool. And yeah, the red line up there, getting close to it. And you could argue that we are there. So it did hit a high today of 628, nearly to 648. And, crossed above 6, but got rejected. So, maybe I'm a little bit conservative. Maybe this is like, how you'd want to draw it for that being acting as support. But maybe getting into where it could be acting as some resistance. Let's see, then I'll go from the low here. So the low on January 27th was at 648. And there's something I wanted to go over with the moving averages on GameStop that I forgot. So I'll do that in a second. But yeah, the low on January 27th at 612. So I got that marked correct. And so that one, maybe I want to make that a thick yellow line, or thick orange, suggesting that could be, a level to be suggesting we could be getting rejected at. And so yeah, 612, we did wick above that, got rejected from it. Maybe it continues higher. Maybe it doesn't though. So I think that this is kind of in the, manage risk zone. We do see volume going up, so I think that's good. But it, went up 6.6% on the day. After hours, up 1% to 604, but in the overnight, it's at 598. We do see, let's see, we do have lower highs here corresponding with lower highs in the RSI. Actually, this corresponding with the highs over there, we're actually getting to higher highs in the RSI versus the lower highs here. So that's hidden bearish divergence. So that does make me think, and I'll kind of doodle that up here with a trend line. So we do have, lower highs. We could, have a massive move up tomorrow, up to above 8. Who knows? 825. And then that would negate this. But right now we do have lower highs being formed, and we do have, based on that time frame, higher highs being formed. And so that's hidden bearish divergence. So yeah, I do think that we could be seeing a pullback. Where could I see this pulling back to? I think $5 seems like a kind of a psychological level. And this where I thought we might be consolidating in. Really, yeah, I think that, let's see, maybe there's kind of a range here. And so let's just do the trend channel. I'm going to do it from the low here and just pull it out here. Maybe if I do this over to, let's see where that purple line begins. Yeah, that's something. I don't know. But the midpoint there, I don't like the white lines. They're just a little too intense for me. But the midpoint there is around $7. So maybe this could go up another $1. But I would think it'd be getting pretty exhausted by the time it does get up to that level. And so from where it's currently at, if we just do a regular old Fibonacci retracement, from that low of 331 up to today's high of 612, I believe was the 628 was today's high. So let's just 627. So let's make that right. Not that it really matters. Oh, and I do want to pull that up. Let's see. The 382 is 515. The 236 is around 558. So that's really not much lower. 236 is actually not that notable of a retracement. So let's do the 50%. Let's remove that 236. as of right now, I could see this pulling back to the range. Really, let's say 5 plus or minus 25 cents. So being like 475, approximately the 50% retracement, up to 525, approximately the 382, which is at 315. So I think that's kind of where I could see this pulling back to, and then maybe finding some support there, this orange line, then getting flipped to support. And so since I do have orange here, maybe I want to adjust this one to be yellow, so kind of getting into the caution zone, and then this uptrend here, that being, the real, value level. And I might just delete this horizontal line there, so we don't have too much clutter. So yeah, I could see this pulling back a little bit around here. I'll just do it to the yellow line, and then maybe we get a move up. If it is bullish, maybe it breaks down into this green box here, but then, that's like deeper value, pulling back to around 420, maybe $4, but ideally, we want to be seeing it putting in higher lows. And so 331, we definitely don't want to see it going back to those levels. And actually over here, yeah, that was a dip buy level. So I might make that a green Fibonacci extension. And this, I'll just leave that white because we're still, letting it play out. But yeah, over here, the low over here was 236. Then over here, it was about $3, 301. Then over here, 331. Let's now put a new low in, a higher low around 5, between $5 and $4, something like that. It's kind of what I think there. So hopefully that's helpful. And then I will just put up the moving averages here above the 50-day moving average at 570. We'll see where it trades though. 50-day moving average at 570 in yellow there. I do want to see that hold, but it does look like we did get a rejection from the, let's see. What is this over here? Oh, no, we got a rejection from, is that a doodle? That's a doodle. Yep, that's a trend line that I drew. I guess, is that right? Oh yeah, for the, hidden bearish divergence. So let's see, above us, the 200-day moving average is around 7. That kind of corresponds with, I'm just going to doodle it up here. That kind of corresponds with the midpoint of that trend channel, which is approximate, so take it with a grain of salt. It's kind of arbitrary, where I began it, and it's just ending with where it's currently at. So yeah, I mean, I could see this going up to 7, but at that point, I would say it's for sure overbought and then likely pulling back. But if it doesn't go up to 7, and if it does pull back, we do have the 21-day moving average around 478. So maybe, right around here, around $5, where I've doodled out that pullback to. So do keep that in mind. And then before I forget, since I did want to mention it, I wanted to go over the moving averages on GameStop because we can see that the moving average here is around 27.22, and that's probably why I had my, dip buy at that level. So maybe I would, split the difference. I was thinking 27.22, kind of an odd number. Let's do 27.25. Kind of arbitrary, but adding a quarter to that 27, okay. But then actually let's split the difference between 27.35 and the Fibonacci retracement here, that 236, and approximately 27.25, because that moving average will go up with the price being up. So let's say 27.25, but let's split the difference. So let's say an addition for one share, small addition, but at 27.30. I think that seems reasonable to reassess if it actually, no, I'm going to do 27.35 because F it, why not? Yeah, it's just one share and I could always use more GameStop as long as it's not calls, because you can easily lose money on those. So yeah, I see that 2 people are still with me. Yeah, I imagine, I will say it differently, I imagine that was helpful. But, as always, those are just my thoughts. If you did find them helpful, make sure you like the video, the stream, share your thoughts in the comments, in the chat. during these streams, and make sure you subscribe to the channel for more videos like this. And I will be doing another, overnight market prep tomorrow evening. But then we'll see. Maybe I'll do a different video, kind of an overview, a week summary Friday evening. So maybe that would be kind of fun. And I will see you guys tomorrow for the prep for Friday.